You're listening to RIAcast, a podcast of the Southwest Florida Real Estate Investment Association. RIAcast brings together a variety of real estate entrepreneurs from all over the world to share tips and ideas. The core purpose of the Southwest Florida RIA is to help members become more profitable and successful through networking, education, and empowerment. Here are your hosts, Jeff Tamarello and Michael Lyons.
Hi, it's Jeff Tamburello. I am one of the directors of the Southwest Florida RIA, the broker-owner of Steel Ridge Realty, and one of the principals of an investment company called Venture Investment Partners. I'm here to talk about the March 2025 Lee County, Florida Foreclosure and Market Report. This is just a brief dive we do on the market. Lately, it's been every 2 or 3 months because there's really not that much to talk about in the foreclosures. Disclosure, this report was prepared personally and is shared with you for information purposes. The data presented here has been compiled from multiple trusted sources, Lee County Clerk of the Court, and the MLS. Here is for perspective, we leave the global financial crisis in here to show you where we are today. There's a slight dip up, which we'll get a little farther to as we drill in. But for perspective, this is what 2007, 8, 9 through basically 10 was. And here was the vaunted second wave that we was quite hyped up that really didn't affect anything. This is since 2015, showing a market returning to normal with the pandemic shutdown. From 2020 forward, trend line shows it up. I think we had 72 last month, but I mean, it's just there's not enough here to change the market. And foreclosures really represent downward price pressure. Banks run markets up with easy liquidity and then run markets down, cleaning off their balance sheets. Here is the average price in Lee County since January of 2001 with a linear trend line, just kind of for some perspective. This is one of my favorite charts. This is the sales counts and pricing. When they hang out together, it's generally a balanced normal market. When they touch, it's some sort of divergence, whether this is divergence to the downside, this was divergence to the upside. We have had divergence to the downside in 21. It has been a slightly declining market in pricing. Sales counts have been, but if you look at the sales counts, the rate of change is definitely not as bad as it was from, say, 22 to 20 or 21 to 22. But the market is declining. We are down from the peak. We will see where we go from here. See you at a meeting soon. I hope this information is useful to you. If you have any questions, just leave a comment or ask at the meeting.
This concludes this edition of RIAcast. Be sure to subscribe to receive our next episode. You can also subscribe at our website, www.swflreia.com. See you at a meeting soon. Please let us know if you have a suggestion for a future episode.